commodities. Even though they've gone up a lot, I think they're going up a lot more. So I think it's a big bull market in commodities that really hasn't kicked into gear yet, but that's coming. The central banks that have been buying gold over the last couple of years, they've been doing the right thing. I lost if I was doing that. So I haven't done that, because I recognize that it is irrational. And, I don't know how much longer the irrationality is going to last. I mean, do I concede that Bitcoin could go from, right now it's around 107, 108,000 or something like 111,000. Can it go to 150,000? Could it go to 200,000? It could. And if I was short, I'd have to ride that out, right? So I don't want to. But
in today's news recap, will silver's explosive rally drive prices to $50 this month? Silver climbed within striking distance of $42 an ounce on Monday, posting its strongest rally since 2011 as a deteriorating U.S. labor market reinforced expectations of a September Fed rate cut. The highly anticipated non-farm payrolls data confirmed a sharp slowdown in job creation, with unemployment rising to the highest level since 2021. Analysts at GSC Commodity Intelligence are now pricing in near 100% odds of a 25 basis point cut on September 17th. The possibility of a shock 50 basis point jumbo rate cut has also emerged, a move that could send precious metal prices into the stratosphere. Silver has already surged plus 47% year to date, more than doubling in value over the last 3 years. The momentum is unmistakably bullish. Data tracked by GSC Commodity Intelligence shows a steady rise in speculative longs, while flows into physical silver and ETFs continue to accelerate. Wall Street desks are openly discussing the possibility of $50 an ounce by year end if institutional allocation expands further. Every indicator we track is flashing green, says GSC Commodity Intelligence. Institutional positioning, ETF inflows, and physical demand are all converging to create what we believe is the most powerful setup for silver in more than a decade. Silver is not alone. Gold has already surged plus 35% in 2025, hitting a new all-time record high of $3,646 an ounce. Analysts at Goldman Sachs now forecast a run toward $5,000 an ounce. That's a plus 40% gain from current levels. For context, 1 ounce of gold was just $35 in 1971 when Nixon closed the gold window. Today's price represents a 103-fold increase over 5 decades. The verdict from GSC Commodity Intelligence is emphatic. Those who position now will capture what could be the most profitable super cycle of our generation. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Banks are getting away from the dollar. That's why gold is at $3,550 an ounce, because foreign central banks are buying it. And they're selling their dollars to pay for it. So the dollar share of global reserves is shrinking and continues to shrink. And the pace is going to accelerate, especially, if the Fed rules or the Supreme Court rules in favor of Trump that he can fire any FOMC member that he wants because a truly independent Fed is not constitutional. So if that happens, that will just accelerate the exit. They won't be walking away from the dollar. They'll be running. I didn't see that statistic. I didn't know that it had already surpassed. It probably doesn't surpass all U.S. dollars because foreign central banks hold more than just treasuries. They hold other dollar assets, including, mortgage-backed securities, but other dollar assets. But the fact that the gold now, surpasses treasuries, that's a big deal. And that's going to continue. And a lot of that is not due to central bank buying gold. It's because the value of the gold that they own has gone up so much. Well, I think that when you talk about how the stock market has underperformed gold, what you're really saying is that the stock market has gone down. People think it's gone up because they're measuring the value in dollars, but the dollars themselves are losing value. So if you measure stocks in something that has real value, that is not being depreciated, gold, if you price stocks in gold, you see that the real price went down. And that's what's happening, right? It's not so much gold going up, it's that other things are going down. And so now you can buy more of them with the same amount of gold. And I think that's going to continue. I think U.S. stocks are overpriced. The U.S. economy is in a lot of trouble. So are a lot of companies. And stock prices are going to keep falling as they've been falling for the past 25 years. In fact, I think they're going to fall even faster. But at the same time, the nominal price can go up, just like the nominal price has been going up, because that's what happens to prices. When you create inflation, prices go up. That includes stock price. Yeah, well, I think there's no question that the world is headed back to a gold-based monetary system. It's the only monetary system that's ever really worked. The one that we have now, that we've had for the past 50 years, has only worked in the sense that we've been able to use it, but it's responsible for these massive global imbalances, the growth of government, the explosion of debt, the high inflation. So if you want to have sound monetary system for maximum economic growth and prosperity and individual liberty, then gold is the only known way of delivering it. So I do think that the world is headed back to a gold standard, and the fact that central banks are buying gold is a recognition that this is in fact going to be happening.
Silver price news targets $41, $47, and $66 as Fed liquidity sparks bullish momentum. The precious metals market is buzzing with excitement as silver emerges from a prolonged consolidation phase. After months of sideways trading, technical indicators are aligning with macroeconomic tailwinds to create what many analysts are calling a perfect storm for silver bulls. With the Federal Reserve potentially shifting gears and inflation concerns mounting, investors are eyeing silver as both a hedge and a growth opportunity. First target, $41. This breaks silver out of its current range and confirms the bulls are in control. It's not just a number, it's a statement that the consolidation phase is officially over. Second target, $47.6. Here's where things get exciting. This Fibonacci extension level represents serious momentum territory. A push to these levels would grab headlines and pull in momentum traders. Third target, $66. Now we're talking about a completely different silver market. This long-term projection would represent a fundamental repricing of the metal, putting it in rarefied air not seen in over a decade. Dream scenario for metals investors. Everything's lining up for what precious metals enthusiasts have been waiting for. Fed policy pivot, check sticky inflation, check economic uncertainty, check it's like a checklist for precious metals outperformance. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
No, it not only will it continue, as I said, it's going to accelerate because the central banks still have a lot of gold to buy. And not all central banks have been buying. So I think the central banks that haven't been buying are going to buy because they're falling behind. I mean, as the price goes up, and if you're not buying it, then you're, losing ground to the central banks that are. So it's going to be more like a follow the leader. Now that the banks that got in early, are winning, the track record is going to attract more banks to get in on the game. And then the banks that are already doing it are going to just speed up the purchases because the more gold they buy now, the more valuable their reserves are later. So it only becomes a FOMO among the central bankers to
I hold.
I have no idea, right? But I do agree that it's possible that China has a lot more gold than it lets on. And the reason it may be doing that now, only to reveal the truth later, is because it wants to accumulate a lot more gold before fessing up to how much it has. Because I think, let's say they have a lot more gold and their plan is to keep buying it, that may push up the price. And if China wants to buy as much gold as it can, the goal would be to keep the price as low as possible for as long as it can. So I think if they really show their hand at what they're doing, it may complicate their goal of accumulating more gold at more favorable prices. So they may just be hiding the true extent of their appetite just so they can buy more for less. And it knows it's all a scam. The Chinese don't want their people wasting their money on this fraud. So yeah, I mean, the more money America wastes on Bitcoin and crypto, the more gold China can buy. So China is happy to have us squander our resources on fool's gold while it buys up the real thing. Yeah, he really doesn't have much interest in Bitcoin or crypto anymore. That ended years ago. It was more of a passing fad. I mean, I think he still has some belief systems, but he's not even, he doesn't believe in gold either. He was a gold bug before he got into crypto, but now he's all into AI. And so his personal belief is that AI is going to lead to such an explosion in productivity that nobody needs gold or Bitcoin. So he's just, he's in a different, camp now. And so we never even discussed crypto because it's not even on his. There's a lot of things that I don't like that I'm not short. If I had to take a position in Bitcoin, long or short, I'd probably take short. But, there are so many things that I still want to buy that I think have more upside potential than the downside in Bitcoin. I mean, let's say I concentrate my money shorting Bitcoin and Bitcoin, goes down. I mean, even if it goes to zero, I mean, what do I make? If I short $1 million worth, I make $1 million, assuming Bitcoin goes to zero. But I could buy $1 million worth of gold stocks. I can go to 10 million. So I just would rather buy the things that I think are really cheap and that will go way up than to just sell something that I think is expensive and that is going to go down. Now, obviously, if I can time it, if I knew exactly when Bitcoin was going to go down, that would be a different story. But I don't. I mean, obviously, I've been talking about this bubble for over 10 years. So had I been shorting Bitcoin,
What do you think of his take? Do you agree with him? Is a big rally coming for gold and silver before a big top forms, or will gold and silver outperform all expectations? Let us know your honest opinion in the comment section down below. Smash the hype button if you enjoy our recaps, and check this video right here because you'll love it. I'll see you on the other side.